Hey guys, welcome to the show. I want to quickly chat about Amazon stock and also its recently released Q4 earning report. Um, this is going to be a lot of slides from the Amazon um, company release document, but also I'll share some of my personal insights just for education purpose only. Obviously, I'm not a financial advisor, legal advisor, tax consultant, or CPA per se. So please consider this as an educational material or something we can chat about on YouTube community platform. And if you like the content, feel free to click the like button, comment, or follow my channel. Let's dive into this. So first thing first, I want to quickly chat about the number of shares outstanding. This is an important metrics, but often outlooked by investors. For Amazon, we're showing here is very steady shares outstanding from 518 million shares in Q4 2020 to 523 million in Q4 2021. Being steady is good. We see a little bit of a stock-based compensation, and that's very normal, very expected. You do sometimes see other companies, especially smaller companies, they issue a lot of new shares to compensate their management or employees, or they issue a lot of shares or convertible debt, I should say, to creditors or investors to get funding they need to fund the business. In those situations, I would say be a little cautious. I think a lot of new shares will dilute the existing shareholders. Basically, it can be risky. This slide shows the net sales or revenue for the company. For quarter four, we're seeing 138 or 137 billion dollars. Pretty steady and healthy growth of about 10% year over year, with a little bit of FX or foreign currency adjustment. I think this is expected. I think it was slightly below the Wall Street estimate, but given the amount of challenges the industry is facing with the supply chain, with chip shortages, and a lot of labor shortages, I think this number is considered being healthy. For 2012 month, this shows the overall revenue $469.8 billion, was a 22% up year over year. I think overall speaking was good, was healthy, but you can see the bars on the left, you see that the pace of growth definitely slows down. If you look at the two bars on the left, from 386 billion Q4 2020, it's quite a jump to Q1 2021. However, last two bars from Q3 2021 to Q4 2021, you see the increase was much smaller. So basically, a company is still growing, but looks like it's slowing down in terms of the top line. Um, Look at it on the right side, breaking down by geographic segment. North America, primarily US, still contributing about 60% of the sales, and the international markets about 27%. The cloud computing businesses contribute about $62 billion or 13%. I think the mix is healthy. Personally, I hope to see a little more slice of the pie from international business and also from the cloud computing business. But I think overall speaking, this pie chart shows a healthy mix. Operating income, this slide shows quite a bit of disappointment to me personally. You see this quarter four operating profit is like $3.5 billion. It was down 50% year over year compared with $6.9 billion in Q4 2020. This worries me because on one side we see the top line growth start to slow down, but at the same time we're not seeing profits getting improved. Instead, we're seeing a decrease in profits. Obviously, there are a lot of challenges in the industry given the COVID-19 pandemic, given the supply chain disruptions, and giving a lot of labor shortages. It's hard to get people to work in the fulfillment centers, to deliver packages, etc. Even corporate employee as well. So I think this metrics is a little low, to be honest, in my opinion. $3.5 billion doesn't really cut for the market capitalization the company has. Um, and I think for the next couple of quarters this year, it's still going to be challenging because all the problems we mentioned will get resolved, but takes time. Also, we do see strong competition for Amazon on the retail side. You have Walmart doing pretty good with their e-commerce business, and we have the brick and mortar based retailers, Target, Walmart, including the grocery stores, and other boutique retailers fighting for these retail businesses. I think right now for the e-commerce business, we're seeing a little bit of challenges. Another issue potentially is the third-party sellers, like a lot of the Asian sellers, Chinese sellers. I think last year Amazon did a lot of enforcement, even shut down a lot of the seller accounts, or frozen some of their funds or accounts because of the quality issues or other practices not endorsed by the company, but by the platform. But that actually cut down into the sales growth and also operating profits as well. Same story for the trailing 12 months, $24.8 billion. Was about a 9% increase year over year after 8% foreign currency adjustment. Was okay, was decent, but I think maybe this is the time to be worried about that going forward. Net income, I think this is the main driver for the stock price to be up about, I think, 15% after hours. $14 billion for Q4 2021. It was up almost 100% compared with $7.2 billion in Q4 2020. From the surface, definitely looks very impressive. I think it blows the Wall Street estimate into the water. However, if you peel the onion, you're going to see out of the 14 billion profits here, I think about $11 billion is from their investment in the startup company Rivian. Rivian is a new company focused on electric vehicle space. Another big investor is Ford Motors. So based on accounting principles, they need to mark to market. So all the investment gains from Rivian company going public in November now get reflected in this earning report. $14 billion net income, 11 billion out of that is from the investment. As we mentioned earlier in the previous slide, operating income was kind of low, kind of disappointing. So, but the market took the news by excitement, at least for the beginning. So the stock price was up 15% after hours. We'll see how it goes tomorrow and also next couple of weeks to see if the stock price comes down. Once the market have more time to consume about this. Same story for the trailing 12 months. Look, number wise looks pretty healthy. Steady increase, $33 billion for the 12 months window, was up 56%. But like I said, $11 billion is due to the events. Minus 11, that'll be like $22 billion. $22 billion pretty much even with a year ago, Q4 2020, and that was below quarter one, quarter two, and quarter three of 2021. So I think there's still some concerns about the fundamental business here, in my opinion. Going down to the segments level, this is the North America segment, their biggest segment. Net sales was $82 billion, was up 9% year over year. To me, this is relatively mature, but given the pent-up demand after COVID-19, I think a lot of people started to shop again in Q4 last year. So we see a good jump here. But operating income, as you see, negative $206 million. This is the first time the company has the operating loss for this segment, in my opinion, if I remember correctly. This is not a good sign. Top line starts to slow down a little bit, but also the cost really add up here. Everything getting more expensive. Inflation, labor cost, fulfillment investment, delivery investment, everything goes up. So that caused companies' Q3 earning to be dropped quite a bit, and then Q4 dropped to below zero. It was down 107% year over year. Now, international segments, similar stories, $37 billion on the sales, but for 2 quarters in a row, now the operating income has become a loss. Last quarter, $1.6 billion loss. That was pretty dramatic. Obviously, international-wise, there's definitely huge opportunities, especially in emerging markets, but Amazon need to move fast, execute their strategies, and capitalize on those emerging market growth. Otherwise, other companies, especially local companies, going to really move in fast, using their advantages, to compete with Amazon on the local markets. AWS, this has been the main profit driver for the past, I would say maybe 10 years or so, and has been the main reason the Amazon stock has been seeing strong growth in the past decades or 2 decades. You see net sales here is $17.7 billion, up 40% year over year. That was pretty impressive. Operating income was $5.3 billion, up 48%. Still very impressive. Personally, I had thought the growth rate for this business to be below 40%. That's what I thought before the earning release. My reason for that is a lot of companies are starting to move away from Amazon to Microsoft Azure business. As you see, that business is doing really well for that company. Or some other companies, even though they haven't fully migrated over, they are considering multi-cloud strategies. Basically, have more than one vendor or cloud computing provider, just so that they have diversification. And as you noticed, last quarter four, AWS had a few major outages that put down their clients. Basically, their websites, their apps are no longer working because the cloud computing services is down for hours. Um, all the corporate clients, they try to avoid this situation. They don't want their end users to disappoint, to impact their customer experiences, to their business operations and sales, etc. So I think my personal opinion is for this year, quarter one, quarter two, more and more companies will start thinking about migration or potentially having more than one cloud computing provider just to diversify, just to de-risk. So I think that poses some risk for Amazon. But luckily, or fortunately, I think for this quarter report, uh, AWS was still able to deliver a 40% increase year over year. That was quite impressive. Free cash flow, this is one of the key metrics to focus on because it represents the company fundamentals better than income. Basically, it represents the amount of cash that's available to the company after supporting business operation, after supporting capital expenditures. It represents the amount of money the company has to pay off debts or to pay dividends or potentially to repurchase shares from the market. As you can see, it's down 129% year over year and was in the negative territory, was down $9 billion. Again, for the challenges we see earlier, slowdown on top line growth, a lot of expenses, potential lot of investment as well, and that basically move this direction from positive cash flow to now to negative cash flow. I think that's a warning sign for me. Um, this year and long term, we'll see Amazon how they can, move up on their new strategies. For example, they're trying to push on Amazon Fresh grocery stores. They're trying to go local, brick and mortar based stores. They try to go international, go to emerging markets like India, Southeast Asia or Middle Eastern countries, etc. We need to see how the company can capitalize on those opportunities and bring in users, sales, and profits. Otherwise, I think the trending will be risky because we do have all the challenges we mentioned earlier, supply chain, labor shortages, inflation and everything, and then U.S.-China relationships, and then Chinese sellers, especially large sellers, they're trying to build their own websites, or they can, go to other platforms, including Walmart, to start selling their products. Given Amazon is being a little more end friendly to them recently. At the same time, the company is facing competition like from Shopify, who basically help companies build their own platforms, and other retailers basically eating their lunch. So I think the fundamentals on the e-commerce business side is very challenging in this year and next year. Same thing for the trailing 12 month. This is basically the free cash flow after paying off some of the long-term debts, financial leases, financial obligations, etc. You see this trend here, it's basically downward trend. In fact, for 2 quarters in a row, Q3 and Q4, we're in a negative territory here. Last quarter, $20 billion after the debt obligation servicing here. So I think a company really needs to move fast and or course correct, basically try to focus on the core businesses, including international expansion, or they need to really focus on other new strategic investment, like a brick and mortar based, store operations. That can be another highlight. I've heard Amazon has been expanding other businesses like the pharmaceutical business. So far I haven't seen much traction yet. Definitely it's in the works. It's pushing hard. Um, I think Amazon really need to get those business up and running and bring more users and revenues and profits. Maybe not profits, but definitely users and revenues to help the company here. So that's my personal opinion about this Q4 earning report and my personal insights. Disclaimer here, I do own a few shares of Amazon. on long term, I feel good about this company, but short term, I'll be cautious. Just given, the earning report was a little bit disappointing to me personally, even though the market may take it well. For me, I would had hoped the company can grow at a faster pace on top line, or show some good profits, some trends in the bottom line. For me, in this earning report, I do see the top line getting a little slow in terms of their growth, but I do not see the corresponding profits in the bottom line. A lot of the net income and the earning per share beating the Wall Street estimate is from that investment in Rivian startup company, because that company went public in November of last year. So for Q1, Q2, I'll be a little more worried about it because that investment gain will no longer be there for next quarter or next 2 quarters, most likely. And the fundamentals of the e-commerce business, if not improving fast, I'll be worried about the Amazon stock price and the market cap. It is $1 trillion company, it needs to grow to support the market cap. So that's my personal opinion. Again, not investment advice. I hope this is useful for you guys out there. So if you like it, please consider following my channel. Thank you.